Hi, this is Paul Scott here on the evening of Thursday the 18th of June 2015. I'm very worked up because this is now my third attempt at recording this video. The last two attempts the software's crashed both times and I've lost the entire video. Getting very, very frustrating, so I thought I'll try one last time. I've rebooted the computer and let's see if we can make this work. So I've got 9 companies I want to mention today. I ran out of time doing the small cap value report today, unfortunately, and I went down to the beach here in Hove and read the Norcross results in more detail, went through those with a fine tooth comb, so that was very pleasant. Right, cracking on with other stocks that I didn't get a chance to mention in the written report. MS International is an interesting one. 23.4 million market cap last night, but it's up 18% today. So remember to add on, and that's about another 4 odd million to add to the market cap, which will update overnight. Now look at the enterprise value, much lower. So this company has a lot of cash on the balance sheet and paying a good dividend yield. Now the results today were very encouraging, I thought, actually. So let's have a quick look at those. Whoops, sorry, just bashed the microphone. Come on, computer. Right, here we are. Okay, much improved performance in the second half. I look back to their interims, and for H1 they were more or less at break even. So the full year they've made 1.454 million, or nearly all of that made in H2. So that's really encouraging. So it looks like they're back on track. Now look at this cash balance. Net cash and short-term deposits increased again to 17.15 million. That's over half the market cap is the company's own cash, which is fantastic. That really protects the downside very, very well, and obviously at some point they'll do something with that cash, either give it back to shareholders or make acquisitions. So as long as they don't do something daft with it, which I don't think they will, because you've got big management shareholdings here, so you're very much it's very much coming along for the ride with what is effectively really a private business that happens to have a listing. This is the best bit. When I saw this paragraph here, I rang my broker and put an order in. I did pick up a few small scraps of stock today, but it's very, very difficult to trade this stock, really illiquid, with a wide bid-offer spread, unfortunately. Order book remains very, very strong. Now look at that. You don't see that very often, do you? Marginally low at the year end than 46 million previously reported, but there's a big new contract here, which they say is in excess of 12 million. That's with the Royal Navy. So so it looks to me like the order book's sort of up around the 60 million level, which is really encouraging. So they should do well in the current year. Now also note more outlook statements here seem pretty upbeat. Dividends, they've maintained the final dividend 6.5p, giving 8p for the year, so that's nearly a 5% dividend yield, which, that's at least going to cover your bid-offer spread anyway. I suppose that's one way of looking at it. Lots of things to like here. The balance sheet is just incredible. It's amazing. Scroll down here. They got freehold property as well. But look at that cash, 35.7 million current assets. What are the current liabilities? 19 million. So you've got a big surplus of 17 million surplus there. Current assets are almost double current liabilities. There is a pension deficit, which has gone up by 1 million to 6.8, 6.9 million. Now, interestingly enough, I noticed on this, I've actually made some notes on the company. I don't use this notes tab very often, but it's really useful. And here we are on 4th of January. I researched it in more detail, and I jotted down the key points. So look at that, 12.3 million freehold property. So you're getting not just cash, but freehold property as well. So absolutely bulletproof balance sheet. And I've said here, probably no trouble in maintaining the dividend at 8p, and that's proven correct. 529k per annum they're paying into the pension fund. Not the end of the world, but it is a material amount, I suppose. Issued excessive director salaries. The directors overpay themselves, which is a problem. I think that's an interesting one. So I picked up a few of them today. What else? Next one, Spaceandpeople. Oh, I should mention also, sorry, with MS International, there was a small acquisition announced today as well, which I think was 3.4 million euros, so whatever that is going to be, about 2.5 million sterling roughly. So still doesn't put a massive dent in the cash pile, about 15% of the cash pile being used. And this business they're acquiring has made a profit of 446,000 euros. So that looks like a sensibly priced deal, which is encouraging, which should help give future profits a boost. Right, Spaceandpeople's announcement today looked quite good. Contract renewal and a new contract win, basically. They don't say that this changes the full year outlook. There's no mention of that, but I think it's certainly encouraging. This company, I like this company. I know they had a disastrous year last year, but the management are sound people, in my opinion. I talk to them and meet them regularly. They're getting the business back on track, in my view. So I think this share will recover over time, but it obviously takes time to rebuild investor confidence. So it's a gradual process, but they're doing the right things, I think. Tristel put out an interesting announcement. I don't hold any shares in Tristel. Probably should, because it's a nice business. But I was umming and ahhing about this when I was talking to a friend the other day about it. They've announced a special dividend. It's only 3p, which is not a particularly material amount of money. However, I think it's more the comments on the future outlook that have got the market excited. And I think it's a really good principle to return excess cash to shareholders anyway. It puts down a marker that, there'll be future special divvies, no doubt. And a company that can grow decently and pay special divvies is in a nice position. Some really good comments here, talking about the more exciting pipeline of new product developments that I've ever seen at any time in our corporate history. New game-changing markets. I mean, this is all really good stuff. So I think people who are long of Tristel are probably correct, and I think are going to do well on that one. Even allowing for the fact that it does look fully priced, it's probably fully priced with good reason, and the shares are up 8p today to just under a quid. It's pretty pricey now, but for good reason. I think it's a good company. Okay, number 4 on my list today is OMG. This is continuing the theme of special divvies. Their shares actually dropped 5 or 6p today. 6p, I think. So for some reason, it's only showing up as 1p here, but it was actually more than that. It dropped from sort of 47p down to 42p. So it's about a 6p drop in shares today. I think that's just a glitch there. I checked why, and it was because it went ex-divvy today for the 5p special dividend. It's always worth checking the ex-divvy dates before you buy a share, in my opinion. And you can look at that on this tab here, where Stockopedia gives you chapter and verse on the dividend history, including the ex-divvy dates and pay dates for upcoming dividends. So I always try to double check that. You can look at the pattern of divvies as well in previous years. So in this case, OMG doesn't seem to pay an interim divvy, it's just a final divvy. Nice little company. I don't currently hold that one. So it's worth bearing in mind, actually, of course, the share price chart doesn't include divvies. So when you look at companies like OMG that are chucking out big special divvies, and other companies like Laura Ashley and Vianet that pay 6% dividend yields, of course, you look at the chart and you think, oh, it's just trading sideways, it's going nowhere. But if you add in the divvies, actually your total shareholder return on those stocks can be very good. It would be nice to have a charting feature which actually showed the share price and added in the dividends on top over a period of time. Somebody should try and see if they can do that, I think. Plus Markets, I'm still short of this one. They put out a TR1 form today saying that Playtech, the company that's done this £4 cash offer, has actually been buying shares in the market. So it looks as if the deal's going to go through now, I think. so my short position will probably turn out to be wrong on that. But I'm not really bothered, because at £3.90 per share, a £4 a share bid doesn't worry me in the least. I've only got 10p downside risk, providing there's no higher competing bid, of course. But I think it's extremely unlikely that will happen, because the company is in crisis, and I think they've frankly been very lucky that any bids come along at all. And of course, if something horrible goes wrong in due diligence and the bid falls through, then I'm going to be quids in on my short position. So I shall leave the short running on that, and just hope to God there isn't a higher offer announced. But it's not a big position anyway. I would never take a big risk on a short. Now, HML Holdings. I think that's the ticker, HMLH. Oops, sorry, bash the microphone again. Yes, here we are, final results. Now, these actually look quite good, but the company, I think, has made a bit of an own goal here, because they've reported 2.5p basic earnings per share, but they don't give the adjusted earnings per share figure. And when you adjust out goodwill amortisation, which I've just done a quick calculation, they actually achieved 3.2p earnings per share, which is in line with broker forecasts. So they made a mistake in not highlighting that. There should have been a prominent bullet point here saying underlying EPS was 3.2p in line with market expectations. So poor presentation of those results, I think, is the reason why they have the shares have dropped today. So I can't see any reason for the shares dropping 6.8%, other than perhaps people misinterpreted the RNS and thought they'd missed forecasts when actually they haven't. Nice little company, this one. That P ratio trailing 12 months, I think, will update to just over 10 for the current figures. So this is actually quite good value, this company. The balance sheet looks awful, but in fact they have a very good working capital profile. So it's okay. I've run through that with the FD when I sat next to him at an investor at a Mellow event. I'm comfortable with their balance sheet, even though it looks weak. It's actually not. There was a trading update from Dillistone again today, which I won't look up. It was kind of a bit wishy-washy, not terribly well worded, I don't think. I find it slightly confusing, but it didn't alter the share price anyway. Findel, I had a look at their results today. I don't like the business model at all. This is the thing that sells. It's effectively a catalogue selling business that sells on extended credit at very high interest rates to consumers, which I think I've got some ethical issues with. I think it's a bit exploitative of lower income people, to be honest. But the profits look okay, quite good actually. Profit before tax from continuing ops up 28%. The PE is only about 8.6, which is low, but I think it should be low because it's not a good quality business. The balance sheet's far too weak for me. It's got loads of debt. It's got a huge debtor book, which is obviously what the customers owe it, and then it's got a huge amount of bank debt as well. There's not enough equity. There's only about 40 million-ish net tangible asset value, which just isn't enough to make this a safe investment in my view. Although they're doing the right thing, they're not paying divvies. Their stated intention is to rebuild the balance sheet strength. I think it's cheap, but it's cheap for a reason. Okay, let's hope for the third time this video actually records properly and I can upload it. So I will sign off now, and thank you for listening, and I will be back probably next week. I don't think I'll do a video tomorrow because I'm having a lunch with a friend. Okay, cheers for now. Bye.